I would like to thank you everyone for joining today's event. This is a virtual session which is on the topic of navigating global startup funding undercurrents. My name is Mehad, and I'll be your host for today's webinar, which is being organized by Startup Bangladesh Limited, which is the largest VC fund backed by the government. Anchorless Bangladesh, a leading US-based VC fund focused in Bangladesh. Bangladesh Angels, which is the largest angel network here, and VD Startup Founders, which is a leading forum of Bangladeshi startup founders. And last but not the least, LightCastle Partners. So in today's dialogue, we will address pressing concerns about the global funding winter and how our local startups should tackle the current situation and how to approach investors for a further round of funding. We have brought in some of the notable local and global experts from the startup ecosystem who will share their views on the topic and provide the opinions on how to survive in these current conditions from an investors and both from a startup's point of view. Before moving into the panel discussion, I would like to take 10 minutes of your time to share a keynote presentation that broadly shares an overview of our startup funding stages in the quarter three of 2022. So we have prepared a report over the last quarter, which we call it Bangladesh Startup Ecosystem Update for quarter three, 2022, navigating the global funding undercurrents. And this report would not be possible without the support of our partners from Startup Bangladesh Limited, Anchorless Bangladesh, Bangladesh Angels, and BD Startup Founders. So just to give a quick context, we have been seeing that the global economy is into an economic slowdown, and it's being induced by some of the recent global pandemic and the rising global geopolitical tensions, especially the Russia-Ukraine war and the climate change exacerbating the production and harvesting challenges. And we see that the supply chain has been disrupted due to this global inflation and recessionary pressures, which is leading down to a slowdown of investments that is being felt even in the biggest startup hubs. We see that over the last quarter, the global startup investments have dropped by 34%, especially the top three investors have invested less than 56% than their previous quarter. Silicon Valley and both New York, they've both in their investment portfolios. And we see that this startup funding, the downward trend, has also affected the Asian startups. Over the last quarter, the investments has totaled to around 75 billion, which is very close to the size of investments that was during the COVID has started. Although after the COVID was ending and we were seeing the post-pandemic recovery, this has been slowly shut down by these recent global investments. And this has led to a lot of uncertainty for our Bangladeshi startups, especially because 94% of our investments are dependent on international investors. So we have seen that this has resulted into smaller ticket sizes and valuations for startups. Larger later stage valuations and startup fundings have been slowed down, and we see a bit more pace has increased in early stage fundings, and local angel investors, they have started to fill up the gap here. And this is not arbitrary. This has been felt by all the South Asian peers. Also in Pakistan, the momentum was very similar. They dropped from 103 million in quarter two to 55 billion in quarter three. So if I take a quick recap about the 2020 investments ecosystem has received. So overall, we see that there were $96 million worth of investments that was received in the first three quarters, out of which in quarter two, the ecosystem saw $68 million worth of investments, which includes ShopUp's deal of $63 million. And in comparison, in quarter three, the ecosystem has only raised around $5 million. While the number of deals were same for both quarter two and quarter three, it has translated to a very smaller ticket size that has become around 300,000 per investment. So we see that the deal has dropped, the ticket sizes have dropped around 92%. And if we look at the $5 million breakdown, we see that it was three out of the $5 million, $3 million were raised locally, whereas $2 million was raised internationally. Now, do keep in mind that this is around 40% of international investments in Q3, whereas our overall average international investment size is around 94%. So that's a huge drop in the numbers. We do see that the investment ticket sizes has decreased from the previous quarters, and like we discussed in the previous slide, this is notably because in Q2 the investments were a lot larger, around 63 million, whereas in Q3 it was around 5 million. But it was luckily helped because of the Shop Ups deal, which was the majority of it. And since international investors, they have been shy over the last quarter, the investors at home, they have stepped up to support the startups. They have been investing mostly in 70 sectors, but ideally fintech, logistics and mobility and consumer services, they're seeing most of the investment that's coming. Out of the 5 million, almost 3 million was put into this part. Local venture funds, which have led the investment landscape, has seen that Series B plus has received majority of the investments, and VC funds, they put in 60%, almost 60% of all the investments that came into this quarter. Notably, right after that, corporate investors, they have put in their seed money into early stage companies. If we look at the notable activities, during Q3, majority of the startups that have received investments were done by Startup Bangladesh. Startup Bangladesh have invested in 9 startups like Chaldal, Frontier Nutrition, HelloTask, iFarmer, Loop, Shuttle, Truck-Lagbe, Jantrik. Other than that, there were a couple of notable events that has happened, notably Startup Venture Studio was launched by Turtle Venture Studio, Huawei ICT Incubator with the ICT Ministry was inaugurated, and it's been happening. GP Accelerator 3.0 saw the closure with this demo day, and Bangladesh Impact Investment Strategy and Action Plan was also launched. So these are some really good progress over the quarters, and we see that mostly this investment landscape has been led by the local investors. So at the end, our observation tells us that the ecosystem players must act with urgency. We need to support the homegrown startups so that they can make it through the funding slowdowns. And for that, we have 4 key recommendations. For the startups, we would like them to keep on raising their investments and raise early investments with a long runway so that they can focus on raising regardless of open rounds, and they can have better leverage during further negotiations in long run. For the local ecosystem builders, we hope that the local angel investors and venture capitals will keep on supporting the homegrown startups through the global funding slowdowns and build investor confidence in the Bangladesh startup ecosystem. Furthermore, for the startups, they should also keep on looking into new business and revenue models so that they can achieve stable cash flows and better product market fitness to weather through this current market. And last but not the least, we look upon government support, which is very crucial, and they can advance us during this ease of they can advance in the ease of doing business and investments so that it helps the startups in the long run. So thank you everyone for giving me the floor. And next, we would like to go into the panel discussion. First, I would like to invite Mr. Robin Butler, CFA. He's the partner and head of impact from Sturgeon Capital, which is a London-based VC firm focused on investing in startups aimed at solving critical problems in the frontier and emerging markets. Mr. Robbins' background is very eclectic. He's pivoting from historian linguist to VC by 9 months of living and studying Farsi in Iran. He's a student of Arabic and Middle Eastern history at university, and Mr. Robin has lived, worked, and traveled in emerging markets for past 10 years, and finally moving into Sturgeon Capital. Mr. Robin, it's our pleasure to have you here.
It's a pleasure to be here. Thanks very much.
Thank you. Next, I'd like to move to Nujur Rahman, who's the CEO of Bangladesh Angels, the country's first angel investment network, which connects startups with smart capital via individual and institutional investors. He brings with him more than 10 years of experience in the development sector, management consulting, and investment advisory. Nujur is particularly interested in water and sanitation and early stage angel investing for frontier markets. Nujur, good to have you here.
Good. Thanks for having me here.
Next, I'd like to invite Ms. Sadia Haq, who's the founder and CEO of ShareTrip, the country's leading online travel platform that provides end-to-end travel solutions. Previously, she has worked at Banalink, Nokia, BBC Media Action, and Grameenphone Limited. She has more than 14 years of experience with expertise in marketing. Sadia Appa, nice to have you today.
Thank you, Mehad, and hello to everyone. And it's a pleasure to be back here with all of you.
Thank you. Next, I'll move to Hassan Arif Pai, who is the head of investments portfolio at Startup Bangladesh Limited, the $65 million VC fund backed by the Ministry of ICT. His career spans more than 20 years of work experience with expertise in private equity and investment management. And it also includes many senior management positions in financial services and technology management companies in the USA. In his previous role, he worked as a vice president for State Street Corporation, one of the largest asset management companies in the world, located in Boston, Massachusetts, USA. Mr. Hassan Bhai, so good to have you here.
Thank you, my pleasure.
And last but not the least, Mr. Rahat Ahmed, he's the founding partner and CEO at Anchorless Bangladesh, an early stage venture investment fund focused on advancing the local startup ecosystem through access to global resources. He's passionate about strengthening the Bangladeshi startup ecosystem by connecting innovative local startups to global investors. He also serves as a senior advisor at Startups Next, a startup incubator for North-South University, the country's leading private university. Rahat Bhai, pleasure to have you.
Thank you for having me.
Thank you. And finally, I'd like to hand it over to Bijan Bhai to moderate the session. But before that, I'd like to quickly introduce Bijan Bhai. He's the co-founder and CEO of LightCastle Partners, which is a management consulting firm that focuses on creating data-driven opportunities for growth and impact for development partners, corporates, SMEs, and startups.
Thank you, Mehat, for the presentation, and thank you everyone for showing up. I understand it's a Monday afternoon, so not the easiest of time to devote up before you kind of go back home from office. I don't know why, but in my screen, Hassan Bhai seems a bit some sort of veil or some sort, but I hope it's just me. But yeah, let me start. First of all, I would like to go. I'll do one round of kind of questions for each of the panelists, and then we'll open it up for the audience, right? So first, Robin, why don't we start with you? Thank you so much for joining us. Possibly very early morning for you, so do appreciate it. So the first question that I have for you is that why Sturgeon Capital is interested in the frontier and emerging markets as opposed to more developed economies, and then if you compare Bangladesh to other emerging economies that Sturgeon focuses on, how would you kind of consider what stage Bangladesh is in? And if Bangladesh has to maintain this momentum of growth, what should Bangladeshi startups do? Three-part question, but putting you on the spot with this. Robin, over to you.
Thanks very much, Bijan, and thanks for having me here. So kind of to start from that sort of high level, like why do we invest in frontier and emerging markets like Bangladesh? And it's because we've seen across other frontier and emerging markets at different stages this digitalization playbook. Initially in China, then in India, Indonesia, increasingly in Brazil and Latin America. And it's our belief that there's a small number of countries that are of significant GDP and population size that are still at the very early stage, still at kind of ground zero, if you like, of that digitalization process. For us, the markets that we focus on are Bangladesh, Pakistan, Egypt, and Central Asia. In all, half a billion people, around $1 trillion in GDP. And I don't think I need to go into kind of detail given the sort of panel and the audience, the challenges that Bangladesh faces, and being very similar to a lot of these markets in terms of general inefficiencies that exist across the economy for both consumers and for businesses. But given we have that kind of multi-market focus, it does give us the ability to kind of compare and contrast a market like Bangladesh to say Pakistan or Egypt or to Central Asia. And I think it's fair to say that the Bangladesh is probably still at the earliest stage of those markets. If you look at the kind of the share of, or the rate of digitalization across the economy, the volume of venture capital that is flowing into the ecosystem is still nascent. But as we've seen in these other markets, it goes from a very low level and accelerates quickly in a short period of time. Pakistan 3 or 4 years ago was in a similar position. Egypt maybe 4 or 5 years ago. Central Asia is, as you probably said, still at a similar one today, and the kind of crude metric, which I don't really like because it doesn't capture a lot of nuances. But if you look at VC funding per capita, in Bangladesh, it's currently around $1. In Pakistan, it's around $2. In Egypt, it's around $4. In Indonesia, it's 35. And that, I think, gives a kind of sense of what of the size of the opportunity in terms of a kind of volume of capital that can still flow into the ecosystem, that can be put to productive use and to be put to use solving some of these problems. Now, I think as we've seen at that presentation at the beginning, there has been a significant downturn globally, but also Bangladesh. I think the problem with all the Bangladesh data is it gets completely distorted by Bcash and by ShopUp. If you take them out, I was looking the other day at the kind of reports, one of the reports you publish, and 800 million or whatever it is in the last 10 years for startups, 60% of that has gone to Bcash and to ShopUp. So if you take that out, actually the kind of normalized level is not so, it doesn't fluctuate so much, and you see it kind of steadily going up. But I think one of the things, and I know I've had this conversation with a few of the other people on this call, that Bangladesh really needs to do is work on its PR for the venture ecosystem and the startup opportunity here in Bangladesh as a country. I think it's something that can be drawn in contrast to Egypt or Pakistan. They have a much stronger presence internationally amongst international VCs, amongst kind of international founders, and I know Rahat has been doing a lot of work recently on trying to promote the sort of raise awareness of the number of successful international Bangladeshi origin founders. But it's these sort of efforts that I think are very important for raising awareness of what is happening in Bangladesh. And I think I'm writing a report at the moment on the opportunity in Bangladesh, and one of the things that struck me is that Bangladesh is now pretty much the largest, if not the largest, mobile financial services sector anywhere in the world. These kind of data points that actually maybe seem like if you're living in the country, they become normal and you don't feel like you need to shout about them. But that's the sort of data point that when you say it's larger than Kenya, a lot of the reasons that people get excited about Kenya is it because of what M-Pesa have built there and the rails that those allow other businesses, technology businesses, to build on top of. So maybe it's some of those things that have become normal, if you like, but that should be shouted about as more of a success, and really as being the foundations on which more digital businesses can be built.
No, thank you, Robin. I think this is very, very useful. And thank you for sharing your perspectives on how we look at Bangladesh. I think what you ended with, showcasing the examples of Bangladesh really mean. I think one of the examples I often speak about is that the middle income population of Bangladesh is going to be greater than the total population of Malaysia by 2025. And when you really understand, internalize that, you can understand that Bangladesh will become kind of like a large market in the future, right? Maybe I'll move to Rahat Bhai next. Rahat Bhai, good to have you. I know that in your career track in New York, where you have worked decades before coming to Bangladesh, you have gone through the dot-com crash, you have gone through the housing market crash in 2008-9. Given all that experience and giving what we're experiencing right now, what would be your advice for Bangladesh? And how can we turn this into an opportunity to showcase Bangladesh better? So yeah, Rahul, over to you.
Thank you, John. That's a great question. I think one of the things that is a little frustrating lately is the negativity in the market regarding Bangladesh domestically. When we go and speak to international investors, they understand that the Bangladesh story is 10 years. It's not going to be about 6 months, right? It's about the population maturing, the rising middle class, etc. So short-term worries are not really reflected from the Western viewpoint into the Bangladesh market. I think locally we need to understand where we fit in the global cycle. Now, a couple of things that might be of relevance here. The biggest kind of hit that we've had probably in terms of startup space is probably SaaS and later stage. Two markets that are historically not particularly large in Bangladesh, which means the amount of money that needs to come into the Bangladeshi ecosystem to completely change the market is not particularly significant, considering, I think last year the total amount of capital allocated was about 119 trillion, of which I think 650 billion was venture. Even if this year or next year that drops in half, that's still way more money than Bangladesh needs, right? So good companies, especially in the earlier stage, should be able to raise capital. Mid to later stage is a little tougher because then you're competing against other comparables where the prices have come down. So it is a quality versus quality battle. And I think I've said this before. Our startups need to be as good, if not better, than the ones regionally in order to get that capital, because the comfort level for somebody to put money into Indonesia versus Bangladesh is still much higher. Now, I do think one thing that's really kind of critical here is to realize that the real value of Bangladesh, as I mentioned, is not going to happen for another decade, right? So if you realize, I'd say what average median age, or the median age right now is like 27 roughly. Most students graduate around 24, 25. Majority of the population is just starting to become consumers. So if I'm an investor and I want a really good access to consumption capital or consumption behavior over the next decade, Bangladesh might be the best market in the world. And as long as we have companies that are solving for that, I don't think there's particularly an issue. In terms of the cyclical nature of the capital, I think one thing people forget is when you have a fund like, say, Andreessen Horowitz, right, which is one of the three big VC funds around the world. Andreessen didn't exist until 2007, right? A lot of these asset classes that we're dealing with are relatively new. And in the scheme of things, it's still where we are still looking to diversify. And the history here shows that as long as investors are willing to be patient and they're willing to allocate, say, 1 or 2% of the total base, Bangladesh's story is as strong as anybody else there is. So I don't think we should be freaking out. I think we should be selling the positivity. And I think the problems right now in Bangladesh are the opportunity, which is to say, hey, you don't have really, scalable healthcare access for the middle class. That's a solvable problem for a founder. Garment supply chain and trade financing needs to be more automated. Fine, another opportunity, but who's solving this? So yeah, I'm excited as ever, and I think the investors we talk to are too. It's just a matter of finding companies that are solving these problems at scale.
Okay, so some of the precautions and anticipating the funding winter, I would say that right from the start, when we actually inaugurated and launched ShareTrip into the market, the only thing that we have been saying, we did not say that we wanted to be the largest OTA in the market, or we want to capture the lion's share of the market, but we said that we want to be here for a longer term. That this is not just, a sprint for us, that we are here for maybe a year or two, and then we are out of the market, but we are here running the marathon. So that kind of gives a gist of how we were looking into our operations, into our business modalities, and kind of looking into the future predictions of how and where ShareTrip is going to grow into. So while we were, especially during the COVID, we have seen that, a lot of changes have taken place, especially in the travel industry. Everything was shut down. There was no interaction between the inbound, outbound tourism. Domestic movement was restricted if it was available at that point of time. So we, as Rahat mentioned, that in spite of all the negativities, that you have to look into the positive impact that you can create or the opportunities that you can actually look into. And that was the opportunity we saw, that there was a huge amount of offline travel agencies who wanted to, take the service, who wanted to maintain their sustainability, but they did not have access because they were dependent on other offline or the traditional stereotype travel agencies. And that is where the OTAs made a very big difference, right? And we have seen that while we are actually serving a larger crowd, initially when ShareTrip introduced itself into the market, we were a B2C driven company. Then we pivoted our business model into the B2B section as well. And right now, the way we are moving forward, it's a B2C to B driven company. That means that we are leveraging the sales and the volume from the B2B segment, which is helping us, to form a very strong, very collaborated relationship with our suppliers, especially the airlines, giving us huge benefits in terms of their rates, in terms of their incentive plans, in terms of their PLVs, etc. So as a result, what's happening is that not only are we growing in terms of the growth metrics and the parameters, but also we are getting a lot of revenue. At the same time, we're getting stronger profit margins and take rates, which we really do not have to kind of incentivize everything on the customers or on the at the endpoints eventually. So whenever we are talking about startups, the main thing that comes to our mind is that, especially if you are converting offline customers into online, the first thing that comes to everyone's mind is that, you need to incentivize or you need to subsidize on your products and your services so that it creates the hook for the customers to convert, and the transitions have been made. But over this, especially during the COVID and after the post-COVID travel movement, helped us not only to grow in terms of market share, but we have been able to successfully run our operations, hit profitability month on month. Even we hit profitability starting from the last quarter of 2022, at the end of 2021. So where COVID was actually quite strong at that point of time. So this kind of shows that you need to have the right sort of planning. You need to have the right vision, as well as the right set of goals, so that you know that you're not going into the disruptions, but you're looking into the changes that are taking place, the dynamics that are taking place, and convert them into opportunities for you. And for the funding winter that you're talking about, it is definitely a concern of whether it's an early stage startup or a growth stage startup. But I would say that the moment you have the long-term vision, you know that, okay, even if I don't receive the funding in the next 6 months or 12 months or maybe 18 months, you still have that ability to sustain by yourself. That key parameter within you, that key idea within your business model makes all the difference, not only for your company's sustainability, but also a point of view for the investors that, okay, since if you can run without the funding so strongly, then with the funding, you have the capacity and you have the, capability to run even stronger and with more flexibilities as well. So I think that is something that we have tried to work on. We have been successful to most of the times. We are still learning. Compared to the panelists out here, I would say that I'm very immature and very early on in this ecosystem and in this startup. But these are some of the key findings that we have found to be very vital and very pivotal for our ShareTrip's growth and sustainability. Did I answer all your questions? Or I think one question is, if I'm, from the investor's point of view, whether it is local or international venture capitals, I think that the changes that we have seen is initially, it was kind of that, okay, what are your growth metrics? If you're a startup, what problem are you solving? What is the ecosystem that you're functioning in? How are you catering, or what is the market size, and etc. Those are the usual key parameters that an investor kind of really looks into. But the core focus was on the growth metrics, that, okay, what are your key growth parameters that you're kind of considering on based on your business model. But recently, what we have seen from a share trips point of view is that there has been a change in terms of the perspective. So now they are not only looking into the growth parameters, but they're also looking into factors like what's your take rate based on your, the zone or the ecosystem that you're playing in, whether you have a strong run rate for the upcoming months, whether you have a contingency plan if there is any kind of global disaster or a natural pandemic like the COVID hits and everything. So these are some of the additional avenues that I think whether it's a local investor or a global investor kind of looks into. So it's not just right now growth. The more you scale, that means you're doing wow, and you're doing a very excellent job. But at the same time, you need to prove yourself that, okay, while we are growing, we are also maintaining some of the other key parameters that drives directly to the sustainability and the long-term physical presence of your company into the ecosystem, which ultimately leads to, either becoming the unicorn that Startup Bangladesh always talks about, making 5 unicorns come out in the next couple of years, or, building Smart Bangladesh, or changing the entire ecosystem of Bangladesh as a whole. Bijan, does that answer all your questions?
No, definitely, Appa. And I hope you guys can hear me now. I changed connections. Is it better?
Perfectly good.
Thank you. And I do hope, ShareTrip, and I'm confident ShareTrip will definitely become a unicorn in the future, right? So, and we will all get free travel tickets, whoever attends.
Fingers crossed, touch wood.
But,
we also hope the same.
Right. I really like that how you mentioned that capital needs to be efficient, right? And you have to really prove to the investors that you are using that capital efficiently. Thank you for that. I think that's everyone here is $1 billion suggestion. Hassan bhai, am I back yet? Can you hear me?
Yes, now I can hear you clearly. Can you hear me?
Yes, perfect. I'm really sorry.
Yeah,
sorry.
so I had a headset. I switched to headset. That was not working. Then I went to the laptop microphone. So I tried to be flexible, like any startup should do. So,
no worries. Pivoting the connectivity.
Yes, pivoting. Sorry,
right.
Go ahead.
Right. No, Hassan bhai, I just wanted to understand that, given, whatever is happening, you have done a lot of these investments, number of deals. So what would be your suggestions, 3 things that you would suggest to the startups that as they go through this due diligence process with local and international investors? So your top 3 suggestions to entrepreneurs in the room.
Okay. Yeah, so if anyone like to give top 3, thank you again for inviting me in the webinar. Very informative. I'm learning a lot from other panelists too. So from the due diligence perspective, obviously, you have to be diligent, right? It's no brainer there. So a few things that if you, in no particular order, financial and regulatory due diligence. So financial regulatory compliance, you have to make sure it happens, that you have proper license, proper permission to do business locally or globally. So the trade license, permission, etc. you have to have, and you have to keep them in order so there's no ambiguity there. Because as the startups come up with new innovative ideas, a lot of times there could be gray areas. So those are the things you want to resolve and address so that there's no confusion there. In the data perspective, you want to make sure your data room is crisp and clean and transparent. You have all the NASA data is available there, financial statements and etc. And the financial statement that you produce, they should match with the financial transactions that are happening in the banks and other institutions, right? So you should be able to back that up, the financial statement and all the data. Because if they are mismatched, then that's cause confusion, that's cause questions. And you have to be very honest about all your data. Because if you cannot justify your data, that affects your credibility. And once your credibility is gone, obviously, the VCs or investors may start not to believe other information also, other things that you're talking about. So you have to be transparent, you have to be honest. And another thing I've noticed, and startup needs to keep in mind, to keep a very good, clean cap table, because there has to be updated with the filings, RGSC filings, or filings anywhere outside the country. Because a lot of time I've seen the cap table says one thing, you check the record and the cap table that the startup saying, so they don't match. So you have to be ready. You have to be make sure that those are all done and ready when the due diligence happens. For the startups, again, as I said, the compliance is important. For example, you have to make sure that you're doing your board meetings, AGM, EGM, etc., tax filing, VAT filing, all these things, you have to make sure they are done and they're up to date. We have seen some cases that a lot of this regulatory compliance they haven't done. They try to catch up, and that does not give a good impression about the startup, because it's a lack of discipline sometimes. I know startups are very busy innovating and doing business, but you have to have a team, the good governance that do all those things and make sure that everything is up and up. So those are some of the key things that startups should ensure when going through the due diligence. Even before the due diligence, they are ready with those. I hope that answers your question, Vijay.
Well, thank you, Asan. I think this is super, super helpful, and I do understand the importance of compliance, right? It's not just about the market, business opportunity, the solution, but it's also about making sure you're part of making sure your startup is investment, it is making sure your governance and compliance is intact, right? Thank you for also stressing on that. Very useful for us. Nirjar, I move on to you, the largest angel network in the country. I think you have 400 members as of now, if I'm not mistaken. So very excited, for Bangladesh to have such a vibrant angel syndicate. If you could give us a bit of knowledge on what are the sentiment around angel investing in the ecosystem right now, what are the thinking, where are some of the areas where angels are seeing a lot of opportunity, and what can startups do to get connected with their angel network? Yeah.
Thanks, Bijan, and good to see everybody. I would just disagree with what Sadi Apu said, because I think we're all learning from you, Apu. So I think I just want to put that out there. With regards to I guess our experience so far, I think it echoes a lot of what's been discussed in the report, as well as what the other panelists have talked about. But I'll just try to contextualize from our perspective, right, as the largest and most active angel network in Bangladesh. So very similar to the report. We were very active in the first 6 to 7 months of the year. We welcomed 20 new companies into the portfolio, around $3 million worth of capital deployed into those companies. That represents about 50% of our total sum in the last 4 years, right? So we were quite active in that kind of first beginning of the year. But then, that for the rest of the year, I think, we haven't been as active, or there's definitely been a slowdown in Q3. I think, it's been about maybe another 10, 20% added on top of that. So I think Q3 has been a challenge for sure. What are we seeing? So as mentioned, we've got 400 plus investors, half of which are non-resident Bangladeshis in places like the US, Canada, Europe, etc. For them, I think there's definitely a lot of jitteriness, right? Their wealth comes from stocks, from housing, from their tech or finance jobs, and all those things are a little bit uncertain at the moment. And we run a lot of, for example, angel list syndicates, both in partnership as well as through rural vehicles, for example. And maybe I've actually seen this. If an angel list allocation of 100K took 2 weeks to fill, maybe back in September, August, nowadays it's taking maybe 3.5 weeks to fill 50 to 60K. People are definitely cutting smaller checks that they get a little bit more about making these investments, because obviously the next year is a little bit uncertain. With regards to VCs, whether those we co-invest with or those that we are looking to do follow-ons into our own investments, looking at some of the term sheets, they're definitely they're taking just longer, like with due diligence in terms of structuring. I've seen certain terms where, for example, liquidation preferences are higher than they used to be, from 1x to maybe a little higher, maybe from pari passu to participating preferred. So they're getting seniority against other investors, including the common shareholders and including the founders. Maybe stronger languages around exit clauses and redemption rights, and definitely pushing back on valuations. No longer can you say, well, we raised from our existing investors at this valuation on a safe round, so now we want to do a price round, and therefore it needs to kind of continue to grow. Now, they'll kind of push back on that, and it's kind of got to reflect and kind of the fundamentals, in particular the metrics, right? Particularly when you're talking about seed plus stages. To echo what I think Hassan Bhai said this. I think Rahat said this. I think Sadi Apu also said this. I think it's really about quality versus quantity for us, and what that looks like. I think in terms of what we're seeing founders do. One is obviously they're trying to extend runway, right? So if you have less than 12 months of runway based on your current burn rate, definitely start thinking about how to optimize that. I think some founders are doing convertible notes, which I think is one way to kind of extend runway, but obviously that creates a lot of overhang into your next round, in particular if you want to close price round. So important to think about. Yeah, I think Sadi Apu mentioned this. No longer will kind of investors accept empty calories, right? Burning a lot of money to produce growth. They'll look at your unit economics. They'll look at your take rates. They'll look at your gross margins and how you're trying to optimize and grow that. I'm still surprised by the number of founders who are trying to raise institutional capital that still cannot really give a historical, CAC to LTV, whether on the supply side or the demand side. They're still projecting out. It's sort of a wish list rather than actual data that you should have, because you've been in the market for a while. You've got customers, you've got users, right? So rather than forward, I think you should start thinking of tracking historical data and kind of showing how you're improving on that. And I think what's also interesting in a lot of these conversations is I'm hearing the P word now, right? Profitability. I think there's definitely at least a movement towards being contribution margin positive. Maybe saying, look, we're going to be operational break even after this next round or this next bridge. I think that's good, but I think it's good for a certain size of company. So if you have a top line that's less than, say, 6 figures a month, then if you're trying to optimize for profitability right away, then that may doom you to be an SME. And that will also doom your early investors because they invested at a startup valuation, right? And if you cannot raise that next round. So I would be very wary of, just moving toward, just because that maybe the funding ecosystem looks a little bit bleak in the short term, trying to cut too deep in response to that, right? I think at the end of the day, the vision matters and how you're building your business matters as well. But those are some of my points. Happy to answer more. And if anybody wants to get in touch, just please feel free to email us or give a call. Everything's on our website. And also, feel free to DM me here. But good to be here as always. And thanks for having me.
Thank you, Nijirba. I think this was very, very useful on the sentiment that you're seeing from Angios and what some of the startups do. And you also touched upon what kind of some of the things are happening with the terms and conditions of investments as well. I think with that, I think we can move on to kind of the Q&A part. And I do see we already have a lot of questions on the chat window. Maybe I can take the liberty to pick a few. So here's an interesting question from Junaid Rashid from Citibank. He has mentioned that Bangladesh Bank has given a refinancing finance facility. I think you can give loan at 4%, refinance it at 0.5%, but banks aren't really equipped to fund startups, which needs more patient capital. Banks require more frequent payments with things like collateral.
I'll just say this really quickly. If we're looking at an early stage company that has debt on the balance sheet, that's a huge red flag. So I would encourage early startups not to take bank loans. This is kind of a standard. However, I think, look, at the end of the day, if you're at a point where you need money to build your business, do what you got to do. And then if you can clean up the balance sheet later on and then, you can scale it faster, that's great. But in general, when venture money comes in, it is earmarked for growth. It is not earmarked to repayment loans. The only exception, the major exception to this are companies that have working capital needs. And working capital needs that are backed by loans or some sort of banking solution is actually welcome, because we don't want venture funding to support working capital needs ideally. So it's matching the right use case that really matters. I think honestly, when it comes down to it, what Nijor and the team has built at BAN is really, really, really critical. And you combine that with the work that Startup Bangladesh is doing, and then I think as a third option you have Idea Project. Between those three, there is funding in the market. I'll be completely blunt. If you cannot raise money from those three, it is likely that your idea is not fundable. And so I would then at that point recommend those people to go and think about potentially getting work experience and gaining the domain expertise needed in order for them to raise in the future successfully. There's no shame in that.
Perfect. No, thank you, Radha. I think that's very useful. Here's the question for Sapphire. I would pass this on to Robin. I know that we have at least a few minutes left. This is from Sapphire. What are the actual parameters that can define that a startup is ready for global funding? So, if you could also shed a bit of light on this. Yeah.
That's a little bit of a question, kind of how long is a piece of string? It really depends on who the investor is. And you look at someone like us, and our kind of ticket size is 500K upwards. So that kind of by definition really needs to be around of a kind of size that can accommodate that ticket. You look at other investors, someone like Accelerating Asia, they do much smaller kind of earlier stage tickets, and they're based outside. So I think what founders need to make sure you do is look. Like most investors will put information out there about what kind of companies they invest in, what stage they invest at, and this sort of thing. So I'm always happy when someone gets in touch, but when people get in touch and have clearly not put any effort into looking at kind of what we do, like we try and be transparent. We don't want to exist behind this sort of this wall and that you have to sort of come in and it's complete kind of sort of guessing game as to what we do. We try and be transparent. We try and put information out there on what we do, what stage we invest, the ticket size, the kind of companies we like investing. You can see the portfolio companies we have already. There's a lot of information out there. And so what I'd say is whenever you're approaching an investor, do your own due diligence on them. Look at the companies they've invested in already. Look at what they put on their website. Look at what they've maybe done podcasts, or they've maybe written articles. From that, you can get a very good sense. And to be honest, if I get a message from someone saying, "Hi there, I'm a Bangladeshi startup, I'm pre-seed, but I see you've invested in these businesses and I'm doing something kind of similar to what you're doing. And so I'd like to have a conversation. I know you don't invest till later stage." I'm already really impressed. Like I'm probably going to take that call, even though you're too early, rather than just the sort of, "Hey, this is what I'm doing. You don't seem to have kind of looked at what I've done." So I'd say from that side, that hasn't quite answered the question, but it's maybe a bit of a bugbear. But like if you're going to pitch to someone for funding, kind of look at what's available online to get a better understanding of what it is they're looking for. And I think you stand a much better chance of getting that initial conversation and building from there.
No, thank you, Robin. And I think we always say, whenever we reach someone, check the website and the LinkedIn profile, right? I think something that we often don't do, right? And definitely thanks for highlighting that as well. Maybe I can pick Hassan Bhai's brain on this. I know you have to leave in a couple of minutes. Akan Mihir mentioned that, what can be the role of stock market? And I know that you have been working with SSE, with the small cap market. So what kind of changes in policies needs to happen there? So if you could shed a bit of light on that, what SSE is doing to support startups at the small cap market. Yeah.
Yeah, so I mean, currently a lot of policies that we have from the SEC to go IPO is not conducive to the startups, right? There's some flexibility there that have been changed in the recent past, but a lot more need to be done. But for startups to think about stock market going IPO, it has to be at a little bit of mature stage of funding, right? You want to go to a stock market when you are, say, doing the last round of funding. I mean, you cannot do it in the early stage or even growth stage. So it's like after raising C or D, etc. But either way, for the exit perspective, to give the investor a comfort level from in the country, you need to have some exit of the startups, right? So this is very important for Bangladesh, that we can see some exit happening from the startup after a certain level of growth. So we are working with DSE to become a little bit more flexible in the regulation side, from their paid up capital perspective, their balance sheet perspective, their profitability, etc. So we are already working with looking into a couple of startups and working specifically with one startup to see how we can bring it to the stock market. We have discussed with DSC that there is a discussion that could we have an alternate board, right? SME board may not be right fit for the startups, but that's too early to say. But some of the startup maybe even be able to go to the big board, right? That's where that's the ideal situation. So we are working with DSC to see how we can facilitate, change some policies, some rules to help the startup go to IPO. So hopefully we'll see some result in the near future.
Thank you, Hassan bhai. We're really excited, and I look forward to making that happen. Small cap market, just like in India or the US. This is a very interesting question from MSI Sakib, and I will put Sadia up on the spot instead of asking the investors. The question is that what key terms a startup owner must be careful and validate before signing a deal and contract? You being the startup owner in the room.
Oh, that is such a difficult question. That is a really difficult question. And quote unquote, this is not the only thing that you should check, because there are so many parameters I'm sure that everyone is aware of. But I think that being a founder, some of the key parameters that we should look into is that when you are actually leading a company and building the company, that company becomes your own baby and you want to nurture it and protect it as much as possible. So first of all, understanding whether your vision of the company and the vision of the investor towards your company, whether it matches or not, whether the clauses related to the growth of your company and to the expansion of your company, it goes hand in hand. Because if there is a conflict of interest, or if there is a difference in opinion about the way you are projecting your company to grow, and your investor is looking into it from a different altogether different perspective, then it really doesn't work out at the end of the day. Second thing I would say is that for us, we think that we have actually categorized ourselves and all our investment funds into two groups. One is where we want to make the strategic alliances, not only that it's a source of cash flow from the investor, but we know that we can use that investor for a much more bigger prospect, whether it is to deal with your expansion of your technology, product development, liaison with associations, or XYZ, whatever helps in your tenure or in your ecosystem altogether. So I think that primarily these are some of the key things, that the founder's authority and the jurisdiction over the company, whether the vision of the founder and the investors match or not, whether there is any conflict of interest between you and your operations and the investors and their current portfolio as well. Because a lot of the investors, what they do is that they talk about possible collaboration between their other invested portfolios as well, which goes into more, your own product, your own service can go for a much more bigger horizon and a landscape. So we should look into those possible areas as well, while we are deciding that when and how and who we want to collaborate with. I think on the top of my mind, these are some of the key things that personally we really looked into while we were actually looking for our investments and looking to talking to our investors.
No, thank you, Sadyapa, for being so open about it and meaning it out. Am I just me, or is Sadyapa just got knocked out? You guys can still hear me, right?
Yep, we can hear you.
Oh, perfect. I'm just going to pose the last question. I know that we're almost at the time limit, but Nijat bhai, I have a difficult question for you, and this is from Sadman Sakib. The question is, of course, we always hear that India has 88 unicorns, 10 decacorns and everything, and in Bangladesh it's more difficult to raise capital. And the question was that what is the main reason behind this? Is it that the ideas that are being solved doesn't go to that scale? So yeah,
my apologies. The power went out in my neighborhood. I think Sadyap was also Bashundhara, hence I'll stay off of video to save bandwidth. I think in some ways, I think like this gets questioned. This a question, with all due respect to the questioner, I think it gets asked in a lot of these forums, and I think what I would push back on is, let's contextualize, right? So India's ecosystem started in the late 90s, right? So it's almost 25 years old. Our ecosystem is less than 10 years old. India's population is 10x ours. They have multi-billion-dollar, family offices that, are now that are investing into different asset classes, including, startups and VC, which we don't have, right? And their economy is much, much larger than ours as well. So I don't think, and India is very unique in the sense that, as far as, I've seen so far, when people or international investors create funds for India, it's very much focused on India. Like there's a specific thesis to India, or even, there's a lot of conversations I've had with Indian VCs who are happy to look at the Bangladesh market, but ultimately, their LPs are telling them to invest in India, right? And so they're a little bit reticent as well, because we're not truly integrated in that regard, right? So I think there's only so much lessons we could take from India as an ecosystem and compare ourselves. And I think there's only so much productivity we can gain from comparing our ecosystem and our funding timelines and our funding valuations to India's. That's kind of my viewpoint. I think there's, as Robin said, I think there's a lot more lessons to be learned from studying similar markets with similar demographics, with similar macroeconomic situations, and makeups. Like, maybe we're behind Indonesia. East Africa is interesting, right? Maybe there's markets, certain markets like Egypt and MENA, for example, right? I think those are markets and business models that we should study and maybe try to replicate some of the work that we're doing here. So I think that's kind of the first point. The second point then is, I think it's about, and I think Rahat talks about this a lot too, like the biggest gap in the market isn't, at least what I've seen both within our portfolio and the ecosystem, is those that have raised domestic angel money and domestic capital, and those that have gone on to raise international institutional capital, right? And in particularly VCs, because, accelerators can only, I think accelerators work in a slightly different way. They can't necessarily lead rounds, et cetera. So I think, and 97% of the capital has come from international sources, right? So, and I think there's a lot of things that are still missing. And I think being able to make that leap, in particularly, I think one of those things, like Sadi Apud mentioned, is being able to truly define, quantify the scale of the opportunity, particularly the TAM, right? Rahat talks about, for example, first order, second order, third order problems, and at each order, I think that the TAM is gets smaller and smaller for a young economy like ours. It's about your presentation skills, it's about the metrics that you're able to show, being able to also learn from these other ecosystems and other startups that are raising money with similar business models, being able to benchmark yourself, right? I think it doesn't take a lot of effort, for example, to just reach out to these founders in other markets and say, look, I'm doing something similar. I'd love to learn more about your experience. Hey, maybe you could, we can also look for some collaboration opportunities, because, everybody's intrigued by the Bangladesh market, right? So I think there's a lot of things we could do to, I think, structure our story and the opportunity for an international audience. And as mentioned, I think India, although people are happy to take that call, I don't know how productive would be trying to follow on and compare ourselves to India. I think we got to take our lessons from other geographies and other founders in those geographies.
Can I just add something real quick, John?
Yeah, go ahead, Rahat.
I think we have a horrible tendency to compare ourselves to India. I just want to be clear. India's better on a per capita basis than China. India is an anomaly. India is not the market we should ever compare ourselves against. There are much better comparables. If we think we want to catch up to India in the next 5 years, it's almost impossible, just because it's a very unique market. Our better comparables, as Nidra mentioned briefly, is more like Indonesia, Vietnam even, and places like Pakistan. Those are much better comparables for us. Having realistic expectations, I think, is also very important here.